The market is down big time. You can see the heat map behind me right here. Microsoft is down big. Apple's down big. Google's down big. You're looking at these. These are the leaders. Amazon. These are the leaders that are just pulling down the market. Now, what's the reason for this? To me, I look at this and I saw something very interesting that happened on August 16th. And I'm going to pull up a chart to show you this. So this right here is just a basic chart. And this white line is your 200-day moving average. This is the S&P 500. Look at what happened. You have had this incredible bear market rally. Incredible bear market rally. It's actually taken us out of a bear market and put us back into a bull market. And maybe that is changing again. So is this going to sustain? We'll get into that in a little bit. But this stock, 200-day moving average is at $430.80. It literally hit $430.80 on August 16th, and it fell straight down. I want to pull up a 15-minute chart just to show you exactly what happened that day. This is a 15-minute chart. Each one of these candles is a 15-minute candle. You hit that high price right here, $430.80, and look at the fall that happened right after it. This thing fell from 431 down to about 428 and actually a little bit below within a matter of 30 minutes. So guys, these moving averages play a difference. You have to remember all of the quant funds that are out there, all of these automatic computer trades that are happening as soon as stocks hit the 200. We can start going through and pulling up different big stocks. This is the S&P. Remember this. Remember this right here. Let me draw a box around it because we're going to start seeing very similar things. Remember exactly what that looks like going right into the 200-day moving average. Let's go to Apple. Same pattern, but it was above the 200. Microsoft. It literally bounced off of the 200 and came right down. Let's keep going. Let's try to find some other ones. Tesla. Nearly the same thing. Popped over that 200, came right back down. So these 200-day moving averages are what are really driving these stocks down. I'm going to pull the S&P back up there. Also, we have another big thing going on. The Federal Reserve. The Federal Reserve is meeting in Jackson Hole this week, and Jerome Powell is going to end up speaking on Friday at 10 a.m. Eastern time. What is he going to talk about? They're talking about their path forward. What are we going to get on September 20th and 21st as far as where interest rates are going? What type of inflation data is going to come out in the next couple of weeks? What type of jobs numbers are going to come out in the next couple of weeks? They've said that they are going to wait for the data to speak for itself. You have a lot of very aggressive Fed presidents that just keep saying that we have not even come close to taming inflation. Right now, it's sitting about 8.5%. Energy is down. And that is a big thing that is pulling that number down from that 9.1, 9.2 to 8.5, using the strategic reserves on petroleum, using different states are cutting state taxes. So a lot of these things are pulling these numbers down artificially. They need to keep going at the inflation number. So is the bear market rally over? I honestly have no idea. You could easily get the market that just continues to go, it stops here and it just skyrockets. That could easily happen. But with all of the sentiment that's coming out, we have just had endless bad sentiment. Let's just go through here. Dow Jones is down 527 points, 1.57%. NASDAQ is down over 2%. And it's declining because of all of the Federal Reserve news. They're worried about what's going to happen. Honestly, let's look at this. Let's not even look in the United States. You have the UK that's saying by 2023, we could have 19% inflation. Their central bank rate is sitting at 1.75%. How are you going to attack 18 or 19% inflation with a 1.75%? What exactly is going on here? So all of these newses just keep coming out and coming out and coming out, but the market keeps going up. I'm not saying that the market's going to drop. I'm not saying it's going to end up being 50% down within a matter of 6 months. But you have to look at the data and you have to be honest with yourself and say, self, all of these things are pointing to the bad. Let's be realistic about this. Let's be conservative about this. Now, the good news is I literally just went in our community chat a few minutes ago and I made the comment, what do you guys think about the market being down this week? And look at all of these responses I've just gotten. They just keep going. A lot of conversation happens here. So what does that mean? If you're out there and you're worried, you don't understand things, you don't understand what's happening in the Fed, you don't understand earnings that are coming out, you don't understand market reaction, or you do understand and you just want somebody to talk about it with, come and join our community. These are great people that all have the same goals in mind, all have the same mindset, and they just want to talk with like-minded people Agree with them, disagree with them, whatever, just get the conversation started. So if you want to talk about the Fed and what's going to happen, you want to talk about the symposium that's happening in Jackson Hole, you want to talk about this 200-day moving average that literally ran right into it and came down like a flying crowbar. The Everything Money community is where it is. Come and join it. Catch you on the flippity flop. How was that? Oh.